Welcome to Great Traders Hub.
Alright guys, you're welcome back to my chat, and I'm very glad to have you once again here. So without wasting much of your time, we'll be diving into the psychology series. And in this psychology series, which will be coming up every Friday, we have the course contents, which are as follows. From number 1 to number 13, a total of 13. So I'll be listing them out one after the other, and I wouldn't actually be going through buttressing deep into each of these points, but I would just give a brief talk about each and every one of them, so that you know what they entail. Okay, so I'll be starting from the first one, which is establishing risk tolerance. Okay, just as all risk tolerance, you can say establishing risk appetite. Just as we have different appetites as human beings, we also have different risk tolerances. So what you tolerate may not be the same thing I tolerate. Okay, so we'll be dealing with that in our first video. In our next video, we're talking about educating yourself. As it is always said, information is power. So whenever you educate yourself as a trader, you tend to gain more power, okay, more financial power as a trader. Number 3, we'll talk about defining your trading goals. A lot of traders just open trades basically because they have the freedom to download the MetaTrader 4 in their digital gadgets like your phones, and then you just open any trade, fund your account and open any trade without having realistic goals. There's one thing to not even have goals, and it's another thing to set unrealistic goals. We are going to talk about this. So number 4, keeping a trading journal. Having a trading journal, a trading record, where you record all your history, you record your present, and you record your future. Your future are your goals, okay? Your histories are your lessons, and then your presents are your current what you are actually learning now. So you journal all these things in your trading journal. Okay, that's what is a very important tool that you need as a trader. Okay, so number 5, we'll be talking about using stop loss. Okay, here traders talk about I lost all my money, and most of the time I ask, how is it possible to just use one by just opening one trade to lose all your money? Because actually forex trading, or any trading I've seen so far, actually gives you the right to dictate or to say how much of your capital you are willing to stake. Trading is all about is all about staking and winning, losses and wins. So let your wins be more than your losses, and one thing that you can use to tame your losses are your stop loss orders. Okay, so number 6, we're talking about calculating your risk appetites. So whenever you open a trade, you should know how much you are willing to stake in your capital. Okay, so we'll be dealing with that in number 6, and at the end of this, you should be able to know how much specifically you are willing to stake in a trade. So number 4, we'll be talking about the power of compounding. Number 7, we're talking about the power of compounding. Compounding is more like building up. Okay, building up. You tend to build up. How to build up your account. Okay, so you don't need to rush things. Rome was not built in a day. Okay, a single tree doesn't make a forest, or how they used to put it. But the bottom line of it is that I just want you to know that having or growing or having a big account depends on your ability to grow, to compound, to build up that account. Okay, so we'll be dealing with that in number 7. Then number 8, avoid over leveraging. Okay, please, this is something that has actually affect traders. Avoid over leveraging. That's why you end up exposing this. Actually, stop loss actually helps you to avoid over leveraging. So you can see that all these topics connect together. Okay, number 9 is risk to reward. Okay, risk to reward. So we'll see how in every trade you open, there's always a risk. There's always a particular amount you are willing to risk, and that amount and its for every amount you are willing to risk, there should be an amount you are willing to gain. Okay, so that's what risk to reward simply means. So if I am trading, if I'm willing to risk 1%, then I should be aiming to get higher, something higher above 1%, from 2% upward. Okay, then we have limiting your trading frequency. So it's not actually every time you need to trade. Okay, when you hit your goals, you just have to stop trading. There is no need continuing to trade. Okay, number 11, we have monitoring market volatility. So many people see this as a drawdown. So many people see it as an opportunity to make money. So in this particular instance, we'll be talking about how to use the market volatility in your favor. Okay, number 12, we're talking about adapting to current market conditions. Okay, as I said, the market is a god of its own, so you have no option than to adapt. Okay, you have no option than to adapt to what the market is currently doing. Then number 13, which is the last one, we'll talk about regular review. So you regularly review your progress as a trader. That's where your journal comes in. You go through your journal and see if you are actually making progress, or you are stagnant, or you are going back. Okay, so that will be all for the trading series. Thank you all for having me. So kindly like this video, subscribe for more content, hit the notification bell, and also share this video to and recommend this channel to those that will be in need of it. Okay, so that will be all for now. See you in our next class.